What's going on, everyone? Welcome back onto my YouTube channel. So on today's video, we're actually going to be doing something extra different, and one thing that I like about this is that it's going to be added with a lot of value. So the title of this video, obviously, it's to maximize your forex profit with this knowledge that I'm going to be sharing into today's video. So what I have here is actually I've got my whiteboard here, so we're going to actually be diving onto it. So I explain each and every point precisely to you, and then after doing so, I'm actually going to jump onto the charts. Then I show you these steps that I do have of what it is that I'm speaking about. At the same time, please do make sure to like this video. Make sure to also hit the subscribe button if you are not yet a subscriber. Turn on the notification bell so whenever I do upload, you get to be notified that the receiver has posted a video. So let us start off first with the very first section of today's video. Okay, so we just landed here on the whiteboard. So I've got my notes set it properly here so that I'll be listing out each and every point or bullet and explain to you what is meant by what I have written down here. So you can simply see that we will cover important facts of the market. So one thing that I want us to focus on is only important facts of the market. So today's topic, we're actually going to be diving a bit more deeper into the nature's theory, understanding how the market moves. And I've stated here that the market moves in phases. Obviously, we've got the impulsive phase and also the correction phase. So meaning that the market moves in impulses and corrections, and impulses and corrections. So that's one thing that you need to understand first. Understanding the whole concept of the nature's theory. And with enough practice, you'll be able to spot setups without putting any much effort, and it will be programmed to you subconsciously. So basically what is meant here is that obviously if you do repeat something consistently or constantly, you'll be able to just do that thing without having to go back to your notes. So basically, if you just understand this whole impulsive move and this correction phase, you'd be able to spot these impulses and corrections without having to really need your notes close to you in order to spot them again, because you have practiced it consistently. When speaking of an impulse, we refer to a phase in the markets in which price moves in one direction with higher momentum than usual. Impulsive move can be seen on all time frames. So yes, at the end I'll get to show you guys these examples of the impulses and corrections in real-time markets also. So I need you guys to just stay with me up until a few more points, because I've got literally, I think it's 6 points that I've written down here. So when speaking of impulse, we refer to a phase in the markets in which price moves in one direction with higher momentum. So this is, it means exactly what is stated here. So like when you look at impulses, so impulse is basically like when you see a candlestick that opens and then closes a bit more further from the open. So basically, if a candle opens, let's say it's okay, I can't be specific with prices, but if it opens and closes without really any longer wicks, like the body is actually bigger than the wicks, then that's actually an impulsive candle. It shows that the real the price, or the open and the close price, is actually much more greater than just the price, the rejections of it, which makes it show that this price is actually it's valid, it's price that is here that we can take note of. And it means that the market is moving in that anticipated direction. Mean that if price opened a bit lower and then it closes much more higher, it means that there is a real progression to the upside, you understand? So you have to take note of that, and vice versa for the short. Market does not move in a clear, perfect impulse move. There will always be corrections in the market, which is why we say there's a cycle in the market. So basically, this is very true. The market, obviously, if it's going upwards, it doesn't really mean that it's going, each and every candle is going to be a green candle and a green candle. It doesn't mean each and every candle is going to be a candle to the upside. There'll be a time whereby it has to rest. There'll be a time whereby it has to range a bit. There'll be a time whereby it has to consolidate. There'll be a time whereby it has to retrace. So that's when we start to introduce us speaking about the corrections. That's when that's why we even stated that there's cycles in the markets. So this is where the corrections come into play. This helps us be able to enter the market at an area of significance. Obviously, if all the criteria of the strategy is met and all boxes are ticked. So what this means is that understanding these two concepts, should be able to enter the market at an area of value, at an area that you actually want to enter at, unlike just thinking an entry at that place because you think that the market wants you to enter there. Understanding this way of trading, you'd be able to enter where you should enter, and you'd be able to capitalize a lot more on the rewards instead of basically risking the same to get the same reward. Corrections happen to be counter-trend movements. That is ranging. The candlesticks will indicate low momentum on price action, with no real progression in either direction. So basically explaining the corrections on how they actually happen. You can see we stated that it's actually counter trend movements that is ranging. Counter trend, it obviously means that like if the trend is going upwards, corrections will be mostly, they'll be to the opposite way. It'll be like just a retracement, meaning that it will just correct to the downside. It will range or consolidate to the downside before it progresses in the real direction. Okay, so you need to understand that. And obviously with the corrections, it's actually candlesticks that don't have any real momentum. Candlesticks that are giving a lot of wicks, candlesticks that are just, the next candlestick is red, the next one is green, the next one is like, there's no real momentum. So that's when you start to speak about these corrections now. So one thing that I'm going to do is that I've got two sketches here, two examples that I got off the internet. So I'm going to be showing you guys two examples of what the impulse and corrections looks like in a picture perfect scene, and then I will be showing you guys on the charts. We're going to be diving onto the charts, and I'll be showing you guys exactly what these corrections and impulses look like, so you'd be able to take advantage of them in your trading career. So as you can see, I've got my very first example here, and we've got this beautiful impulsive move right here to the downside, and as you can see, the price was pushing a bit more to the upside. So we've got our first candle, second candle, third candle, fourth candle, and take a look at all of these candles. These are candles that are actually engulfing candles, so it shows that there's a lot of momentum to the upside. A lot of engulfing candles formed this impulsive move. So as you can see now, on this correction, on the second phase, we started experiencing a lot of red and green candles at the same time, which literally shows that there's no real progression in the market. And you can simply see there's wicks also to these candles, and there's a lot of, like, there's no real progression. Someone would say it's moving downwards, someone would say it's moving upwards, but us understanding the structure, understanding the nature theory, would be able to see that, okay, no, this is just a correction that's giving us an entry, or that's allowing us to see what the next possible scenario is going to be like. And in this manner, obviously the next impulsive move came. So obviously, if you do understand what type of a pattern, you'd be able to take advantage of that. And yes, do comment below if you want me to speak much more deeper into details explaining patterns. Just comment below if you want me to explain all these patterns to you, so you'd be able to spot and see and anticipate future moves using these patterns that I'm going to show you. But I won't make that video unless you comment below and let me know that you really do want to know. Okay, so let's move on to the next scenario. So as you can see here, we've got a beautiful chart that I also got on the internet. You can simply see that it matches super perfect with the type of method that we actually trade. You can see that there's a lot of heavy momentum to the downside, on the very first part of this sketch. So you can see there's a lot of momentum, a lot of red candlesticks, and then followed by this correction. The first box ticks, it shows us that there's a correction. So this correction, someone would say it's price moving upwards, but no, it's not really that way. There's no real progression here. Yes, it's moving upwards, but it's moving upwards in a corrective manner. You can make profits going upwards, but you won't really make that much profit because the momentum is not to the upwards, it's to the downside. Just take a look at the very first impulsive move that came after that correction. You can simply see that if you took a sell, obviously here I see a lot of entries that we could have capitalized on, but if you took a sell, you'd be able to be honest, you'd be able to just grow your account massively, because like just a single trade risking 1 to gain 3 or more. With this one, you won't even gain 3%, you'd be gaining 10 plus percentages if you obviously take this entry in a much more better manner. So you can simply see how this impulsive move is. There's a lot of red candlesticks that are followed by each other. Instead of red and green, there's just a lot of red candlesticks. There's a lot of momentum to the downside. And take a look at when this correction started. At the very bottom, at the very low, price started pushing upwards, on which that's when our next correction started. So obviously, understanding structure, you'd be able to see that, okay, no, this is the start of a correction. So obviously I have to wait for a much more better scene to be able to enter on the next impulsive move to the downside, on which, because I can see this correction is printing a continuation flag to the downside. So one thing that I'm gonna want us to do now is that I want us to actually jump onto the chart, so I'll be able to just show you guys me explaining the impulse and correction, so you understand it a bit more better. Okay, so I've got a clear chart here that I would want you guys to actually take a look at when explaining this impulsive moves and correction moves. So one thing that I'm gonna do is that obviously I want us to firstly spot what an impulsion would look like. This is an impulsion to the upside. Price is actually progressing to the upside, as you can see. Impulse, correction here, impulse, obviously a young correction, impulse, correction, okay, and impulse all the way to the upside. So I want you guys to actually spot that this is actually a clear impulse. And like I said, there is no just a clear momentum, like there's no clear progression without like some sort of a correction in it. Like the market can literally shoot all the way to the upside without giving a small even if it's a very small correction, but that has to happen in the market. That's how the market moves. So one thing that I'm going to do is that I'll just take this out from this leg up until, let's put it, okay, yeah, I think it's okay here now. So I'll take this whole section, bring it all the way down to here. So we take a look at it. And one thing that I wanted to mention too is that there's with corrections, there's two types. You'd be able to spot that there would be a correction that actually allows you to capitalize or to the upside. There'll be a correction that allows you to capitalize to the downside, which refers to me just stating that there is actually a continuation and a reversal. So you need to understand which actually correction are you trapped up in, should be able to make the next movement to the like you'd be able to make the next anticipated impulse move. So if you do want me to cover more about these reversals and continuations, just comment below, let me know. Yes, speak about continuations, reversals, and then I'll know that you guys really do want this. I'll work on making videos that you guys actually request and focus on. So just by looking at it, you can simply see that yes, this is actually a clear movement to the upside there. So the market started to not give me real progression from here up until somewhere down to here. So there's actually a corrective phase. Now, this is actually a corrective phase. And why would I say so? Because if, let's say, you use the most two significant points, you'd see that you'd have something like this. Now, so I'm using the most two significant. Obviously, this would be my higher low, and this would be my higher low since this broke the higher high. But take a look at this. This actually broke out, but it went back into structure, which gave me a sign that we are now trapped into a corrective phase. So what I do is that I start to focus on this correction of my one. I start to focus onto this correction. Okay, and then I see what type of a pattern it brings. So just by looking at this one here, obviously. Okay, there we go. Okay, right here. So just by looking at it, this is obviously my impulsive move that I just mentioned to you guys, and this is now my corrective move. So with this correction here, you can simply see that it's actually a correction. Yes, correction, but it printed up a pattern. So this pattern is actually a rising wedge or ascending pattern. Okay, pattern, there we go. This correction is actually a rising wedge or an ascending pattern. So understanding how this rising wedge or how this ascending pattern works, it means that it has to break to the downside. Now, that's what the rising wedge or the ascending pattern means. It means that it breaks to the downside. So understanding that this is moving upwards, then this happens, it means that it's breaking downwards. You can simply see that there's actually a reversal pattern. It's not a continuation, but it's a reversal on which we now able to understand that the market is going to push to the downside. Okay, so that's one thing that I wanted you to see. One thing, let me move on to the second phase of what I was speaking about. Okay, so after that happened, obviously you can simply see that now we are involved in this next impulsive move. So now we got out of that correction and we got involved into this next impulsive move. So how do we capitalize on this? So there's different types. Obviously there's a type whereby you can take an entry somewhere close to here, and there'll be a part whereby I'll just show you. Let me focus on this first impulsive leg. So with this impulsive leg, you can simply see that after price started going downwards, price gave us this beautiful correction that we normally wait for. There's specific hours that you can wait for it, but it's not really it doesn't really play out all the time like those hours that you'd be waiting for it. Sometimes it could take 6, 7, 8, 9, 10 hours, because I use the 1 hour time frame obviously. So there's different types of styles that you can be comfortable with. So this is actually one of the entries that we took the previous week. We took a sell here obviously because of the confirmation that we got here. Obviously you can have a stop somewhere close to here, which is like a 44 pip, and your target is going to be, depending on your 90% rule, where you place it in, all these types of things, target is going to be all the way to the downside, on which you'd be able to capitalize on that just by seeing the risk to reward, as long as there's 1:3 or more. But I wanted you guys to actually see how to actually take advantage of this, and also just by looking at this whole section here. Let me just do this real quick. Just by looking at this whole section, which this is an impulsive move, you can see that okay, we are now also being involved into a correction. So what do I mean by that? You can simply see, if I just do this and if I just do this, that this is a very clear correction. So I'm somewhere close to here. I can literally just place myself. The market is actually going to continue going to the downside. So I'm actually going to be seeing moves that are also like this. Okay, I'll be seeing such moves going to the downside. because of me understanding structure and taking advantage of it. So this is what I'm going to be seeing. Price can just come, break, retest, go, give me my small correction, shoot all the way to the downside, continue with the downward movement. So you have to understand what is actually important within the markets, and this information is actually going to help you out so much on your trading journey. Like, it will help you out be able to just go from making 15-20% a month to literally like making 30-40% a month, something like that. So just do take this information into value. Just make sure that you took a lot of notes. Just make sure that you do come back to watch this video, and this is actually going to be that one video that's actually going to change your trading career, your trading journey. Guys, you know me with value. You know that I like to come and give as much value as possible. If you did like this video, please do just make sure to comment below what I just actually asked you to actually comment about. You know, if you want me to speak about patterns, or if you want me to speak about the topics that I actually did mention. At the same time, please do make sure to like this video, hit the subscribe button if you're not yet a subscriber. It's okay. I understand that you already maybe wanted to understand what is my concept, how do I see the market, and you can see that I actually follow the market in a much more cleaner way. Instead of having a lot of indicators, instead of having a lot of things that are complicating the price action for me, one thing that I focus on is just seeing the market in a much more better perspective, in a 3D perspective. Fortunately, now I was able to see it evolve myself, obviously, and see the market in a much more better, which is a 4D perspective. So if you also want to see the market in this way, obviously you can just join my free group. That way I like to send a lot of setups, I like to send a lot of whatever that I can get out there that's going to help you out. So I send it in this free Telegram group, whereby I'll just put the link in the description box, whereby you'll be able to get and be a part of us. But thank you so much for watching up until this very end. It's your boy Lisiba Mutupi, and I will see you on the next video to be uploaded.